Hi guys, Christian here from the MCI Trading Academy with the latest stock market analysis for the week ahead. And in today's video, guys, we'll be discussing why the stock market is rallying. We'll be analyzing a number of factors to identify why the stock market has been rallying over the last couple of weeks and whether this rally is indeed sustainable or not. So guys, make sure you watch until the end because we have a lot of exciting new content to be presented to you in this video, guys. And as always, if you do find the video useful, please don't forget to give it a like and share it with your friends and anyone else that may also find it useful. And if you are new to this channel, guys, please consider subscribing. We do bring out a new video every single Monday, and we have a lot of exciting new content coming up very soon. Now, let's begin by looking at what started this rally in the stock market. And as we discussed last week, guys, it all started because of this article by the Wall Street Journal by Nick Timiraos. Now, Nick is seen as the Fed whisperer, and every time the Fed is in their blackout period and they are not allowed to communicate with the media, they normally use Nick to communicate some of their intentions, especially if the stock market is at extreme levels or is doing some extreme moves. And that's pretty much what happened. At that point, the US dollar was hitting some extreme levels, especially against the Japanese yen. And they've used Nick to basically say that the Fed is set to raise rates by 75 basis points and then debate the size of future rate hikes. Debate the size of future rate hikes. This was the key phrase in this article here. Basically means that they will either pause their rate hikes or stop them altogether. And as we know, this is positive for the stock market. And if we are to look at the S&P 500 since this article came out, you can see the article came out here on the Friday, the 21st of October, and we had a massive rally since then. Now, the stock market, the S&P 500 has had a rally, and if we are to look here at the DXY, we can see that the DXY has also had some cooling off since then. So all in all, that came out as expected pretty much. Now, another reason for the strong market rally that we've seen, guys, are the midterm elections. Now, they are fast approaching in November, and they are seen as the second most important elections in the US after the presidential election. So they are crucially important for politicians. Now, I wanted to point your attention to this letter from Sherrod Brown, which is the chairman of the banking committee in the US. Now, this letter was written to Jerome Powell, who is the head of the Federal Bank in the US, on October the 25th. Now, this letter is very interesting. You can pause the video and read it if you like to, but I just want to point your attention to the last bit of this letter, which basically stated that for working Americans who already feel the crash of inflation, job losses will make it much worse. We can't risk the livelihood of millions of Americans who can't afford it. I ask that you don't forget your responsibility to promote maximum employment and that the decisions you make at the next FOMC meeting reflect your commitment to the dual mandate. In simpler terms, guys, what he's basically saying is saying stop raising interest rates. Stop raising interest rates because people lose their jobs. They will stop voting for us at the next elections in a couple of weeks, and stop raising interest rates because the stock market is crashing and we are invested and we are losing money. That's pretty much what he's saying. So he's basically just looking at themselves. They don't care about inflation. They don't care about millions of Americans, as they state in here, because if they did, he wouldn't say that. Okay, in order to get down inflation, they have to raise interest rates, guys. Okay, and Jerome Powell, he's warned us of this. At the end of August, he came out and said, listen, what I'm doing here, it's going to cause a lot of pain in the short term. People will lose their jobs, but that is necessary. As people lose their jobs, they will stop spending money, and as they stop spending money, inflation will go down, and that is the only way to control inflation, guys. Now, as you know, those politicians are now getting worried that people will stop voting for them because their pension funds are down, they are losing their jobs, and this is causing a lot of panic for them as the elections are approaching. So, guys, they only care about themselves. They don't care about people. Okay, about everyday people that are struggling. And who caused this inflation? Mainly the politicians, by giving out free money. Okay, so now they're coming up and saying, listen, please stop raising rates because you are killing everyday Americans. But what they're saying, they are not killing everyday Americans. They are killing their dreams, or they are killing their chances of holding on to their seats, to their jobs. And the reason the stock market has rallied, it's rallied in anticipation that at the next FOMC meeting, which is this week, this Wednesday, the Fed, Jerome Powell, will change its language. He will basically say that in the next meetings we will stop raising interest rates and perhaps lower them, okay, in anticipation of that, which I believe will not happen, guys. Okay, so don't get your hopes up, because I think that was just a false hope. If they do stop at this point, that's it. Inflation will never go back down. So watch out for that. Now, guys, following this strong move that we've seen in the strong market in the past week, it seems that the Fed has started to communicate a different tone, again using Nick Timiraos as his messenger, because on the 28th of October, right after the market has closed, Nick came out on CNBC, I think it was, and he came up and said this. He basically said that it's not just the stock market, they care about financial conditions, they being the Fed, okay, says Nick Timiraos. On the Fed, if you were to get a sustained dramatic loosening of financial conditions, that will be a conundrum for them. Basically what he's saying that if the stock market is rallying, okay, that means financial conditions are loosening, which means that the Fed is not being taken seriously. It means that the inflation, okay, is not going down, which means they have to do what? They have to keep raising interest rates, guys. So it seems like they've changed their tone coming up into the Fed meeting this Wednesday. So this is very important here, because if the stock market will rally and it keeps rallying, okay, this is bad for the Fed. Okay, the Fed doesn't like that. The more the stock market is going up, the more they have to raise interest rates. And going back into, is this rally sustainable? Well, not really, in a way, because if it keeps going higher, then we know that they will keep raising interest rates, which means that eventually, okay, the stock market has to go down lower and a lot lower if they keep the interest rates higher for longer. Now, guys, someone I follow said this on Friday last week, so just a quote on what they've said that he had a conversation with a money manager that manages accounts for high net worth clients. And here's one thing he said. He said, I know a sustainable bottom isn't in, because I haven't lost sleep yet and I haven't gotten sick to my stomach. Now what he's saying, I don't think the stock market bottom. I don't think we've seen the stock market bottom, and the reason is because I haven't seen capitulation in the stock market. Now this is what I've been warning for the last couple of weeks and months now, that we need to see capitulation before we see a real stock market bottom. Now capitulation means we need to see the VIX spiking above 35 and staying there, 35, 40, 45. The VIX hasn't spiked above 35 in a long time, okay, which means that even though the stock market has been dropping, we haven't seen that fear in the stock market, that capitulative fear that people are panicking, okay. And until we see that, guys, I don't think we'll see the bottom in just yet. So bear that in mind, just discussing about the sustainability of this stock market rally. Now, guys, let's go on and analyze the charts. But before I do that, let's look at the economic calendar and what important news announcements are coming out this week, because we have a week full of news announcements that will potentially shape up the week in terms of whether we keep carrying on with this rally or we drop potentially to new lows or retest the bottom. Now, this week we have two crucial news. Okay, starting with Wednesday, guys. On Wednesday we have the FOMC statement, okay, at 6 o'clock on Wednesday. And again, guys, this is going to be crucial. Now they're expecting to raise rates by 0.75 basis points. If they come up and raise rates by 50 basis points, so lower than they were expecting, the stock market will rally potentially to all-time highs. But if they come up on Wednesday and say that we are raising rates by 75 basis points and they will keep rates higher for longer and will raise even more if we have to, okay, that may cause a crash in the stock market, okay, guys. So make sure you watch out for that. Watch their actions, what they're going to raise rates by, and watch their tone, okay, how they are speaking about their future rate hikes. Okay, so that will be on Wednesday. And then on Friday, guys, we have what? We have the non-farm payrolls coming up at 12:30 on Friday. Okay, we need to see the health of the economy, how healthy is the US economy. So those two economic news you have to watch out for, okay. They are very, very important. Guys, don't forget about summertime changing, okay. So as you guys know, we've had the winter time coming up on Sunday morning, which means that we have to wait for the US to also change their clocks to the winter time as well, which means that as a result, trading hours will be temporarily shifted back 1 hour to coincide with US markets, which means that everything will be shifted up forward 1 hour, which means that the stock market, guys, in the US opens up at 1:30 UK time. They don't open at 2:30, they open up 1:30 UK time, and they close at 8 p.m. UK time, not 9 p.m. guys. So everything shifting 1 hour just for this week, okay. Everything will go back to normal from the 6th of November 2022, okay. So from next week everything goes back to normal. So make sure, okay, that you don't get caught off by this, okay. Watch out. Now let's move over to the charts and start off by looking at the S&P 500. And guys, here we've seen an amazing rally over the last couple of weeks, as we've discussed already. Now we are at a critical level here on the S&P 500. We are at the weekly IC here, where price should have a reaction from if we are going to see a retest of those lows or new lower lows. So we are at a crucial point here. If we go past this IC, then we are perhaps, we're going and testing this IC here, and perhaps having a break of structure on the weekly, which on the higher time frame, which would suggest that we we'll be seeing higher highs and potentially new all-time highs very soon. But as it stands here, we are still in a downtrend. We got a lower high, lower low, and we potentially have our lower high here before going on and retesting the lows here and perhaps going into the weekly IC here at 34.50, which is our ultimate target for the year, as we've been discussing over the last couple of weeks. Now, what are we looking for in here? As you guys can see here, I am looking for perhaps price to push higher at the beginning of the week, still in anticipation that the Fed will, will be a bit more dovish and will indicate a slowdown in their rates. And as it comes out on Wednesday evening with a more hawkish tone, with a tone that indicates that interest rates will stay higher for longer, then I expect a drop. Remember, guys, if the stock market rallies, this is bad news for the Fed. They don't like this, okay? And if it does rally, then I will anticipate us to slow down and to see a big drop as the FOMC meeting takes place. In terms of what I'm looking for in here, okay, either price will react from this 8-hour IC, as we've seen an initial reaction from here. So we need to see here if we are to hold those this weekly IC, this 2-hour IC on here. Okay, guys. So I will expect to see, as you can see, we are on an uptrend here. Okay, making higher highs and higher lows here. Okay, so there's nothing suggesting that we see lower prices. Okay, so we need to see a break of structure on the lower time frame. As it stands, if we are to look at the 15-minute IC here, I expect price to have a reaction from here. So perhaps when the US session opens, price comes here, consolidates, and we go and make a new higher high. The ultimate target here, guys, will be this this 1-hour IC here, okay, at around 39.80. Okay, then if price comes in here prior to the FOMC meeting, I expect price to stay here, consolidate, and perhaps we can get a nice short position on Wednesday evening. Okay, however, okay, if price makes goes lower, okay, it doesn't respect this 15 minutes IC and this other 15 minutes I see here at around 38.30, then it's crucial that we monitor this 2-hour IC. If price moves lower prior to the FOMC meeting, past this point here, which is at around 37.80, then we have broken structure and then we're looking for lower lows to come. I don't expect that would happen. Even if we drop all the way to 37.80, I expect us to have a reaction from here. Okay, here is where the lower expected move for the week is as well. So this will be a nice buying opportunity if price makes it here prior to the FOMC meeting. Okay, guys, so that's something to watch out for. Next, we got the UK 100, and here, guys, it's difficult to note on here. But what we're seeing that we're finally moving higher and trying to retest this this narrowing channel that we broke, and that's perfect. Okay, and what I'm looking for price to come back, retest this narrowing channel and come into this weekly IC here in and around 7,215 or so. If price comes here, consolidates, then it will be a nice short position. Okay, however, if price doesn't respect this weekly IC, then I expect higher prices to come. That's pretty much it on here on the UK 100. So this level here, the weekly IC, is something to watch out for. Obviously, if before that we see lower prices, then guys, we need to keep that in mind. We get this 8-hour IC here. If we go below that, we've tested that once already. If we lose this, then obviously we're looking for lower prices sooner than this. But I will expect this weekly IC to be tested before we see new lows on the UK 100. Next, we got the DAX, and here, guys, it's finally happened. We broke this this downtrend. line that we've had here, guys. Now we broke it once before. Okay, we had a false break and then immediately went and made new lower lows. Now it can happen again here, guys. Be very careful. If as we've broken it here already, if we go and close below the trend line again here, either today or at some point during the week, then I expect us to make a new lower low here. So watch out for it, guys. Be very careful here. We broke it once again. We broke it here before. That was a false break. We saw new lower lows. Is this going to happen again, or are we able to retest this, hold above the trend line, and make a new higher high? So this will be crucial, guys. As it stands, this chart looks very bullish, guys. So there's nothing bearish about this chart. And as we discussed in our Discord community, and again, if you aren't part of the Discord community, go over to our website, mcitradingacademy.co.uk, where you can join for free, guys. It doesn't cost you anything. Last week, what we've had on here, as we discussed in our Discord community, price reacted as from the 1 hour IC every single day. As you can see, price rallied, came back, tested the 1 hour IC. Okay, here as well. Okay, here as well. Here as well. Tested the 1 hour IC. Again on Friday, tested the 1 hour IC and then rallied off. Okay, we've done that every single day last week. Are we going to do that again this week? We have the 1 hour IC all the way down here at 37.80. However, we've got a 15 minutes IC, and this is exactly where price is at the moment. So if we are able to hold this, then we're perhaps looking for higher highs to come. However, if we lose the 13,080, okay, then that's it. We've broken the structure on a smaller time frame, and we are looking for lower lows. So watch out. As it stands, you can just play the uptrend, guys. Okay, comes into the 15 minutes RC, consolidates, and then higher highs, and you can just buy as it comes into the 15 minutes IC or to the 1 hour IC down here, and then aim for higher highs, and you can keep doing that until you see a break of structure. But as it stands, this looks very bullish, but again, be careful as it may be a false break. Okay, and the FOMC will decide that, guys. Okay, next we got the US 30, and again, this is at a critical level. We are at this daily IC here, and we are also testing this downtrend line here on the weekly time frame again. So we are at a pivotal moment, guys. Are we going to break above and hold and see perhaps new higher highs or new all-time highs, or are we going to reject this trend line here and then see new lower lows? So it's a pivotal moment, guys. Again, I think we've here the US 30, the Dow Jones, it looks the best out of all US indices due to the financial companies having some strong results in terms of their earnings. Okay, however, we are at a pivotal moment here. So we are at the daily IC, and we are starting to reject that. So we got the daily IC and the trend line on the weekly. If we are going to reject this, okay, perhaps we go lower into this this daily IC here. However, if we break through it, okay, I'm looking at this this 4 hour IC here, guys, okay, which is at around 30,180. That's roughly 1,000 point. No, it's 500-600 points, okay, from where we are now. As it stands, guys, we are in an uptrend. Okay, we are in an uptrend, and for us to say that the price is going lower, we need to see a break of structure. As it stands, price may react out of this 15 minutes IC or this 15 minutes IC, and ultimately if we break below this level here, then we go lower. But as it stands, guys, there's nothing to tell us lower prices are coming. Again, remember the reasons we discussed about why the stock market may rally. Okay, we've got the midterm elections, we've got which will fuel that rally. Okay, and then perhaps we see a drop after the midterm elections, guys. So be very careful, and again, watch the Fed's language on Wednesday evening. Are they going to be dovish or hawkish? Okay, that's very important. But as it stands, this looks very, very bullish, and we need to see a break below this level here, okay, for us to say that lower prices are coming. As it stands, we are at a critical level. We may be able to get a short from here, okay, if we see some break of structure on perhaps a 15-minute time frame, okay, but as it stands, there's nothing to tell us that the price is going lower. Again, we've had quite a big run here, okay, quite an aggressive run, so a pullback will be, you know, will not be out of the ordinary here, okay, but in order for us to say that we're going to retest those lows here, okay, we need to see more than just a pullback. We need to see a break of structure on a smaller time frame. Next, we get the US 100. And guys, the US 100 looks the weakest out of all of them. However, we've just broken the structure on the daily here. Okay, we've broken the structure, and it suggests that we are going to see higher prices here. However, we are at a pivotal moment here. We are at this 8-hour IC here, and it looks like we've tested it once, twice, 3 times, and it's just holding this level. So as long as we are able to hold this level, then it does suggest that we can go lower, but if we break above this, then I expect us to either have some resistance at this 8-hour IC here, or this IC here, this 1-hour IC here at around 12,100 or so. Okay, if you look at from a weekly perspective, we get this weekly IC here from where price may see a reaction. So I wouldn't be surprised for price to rally all the way to around 12,000 12,100 right into our IC before the FOMC meeting, where we can see some consolidation and then perhaps a bigger sell-off to retest those lows or see lower lows. Okay, so that will be crucial, guys, to watch out for this week. In terms of the VIX, now guys, we smashed the VIX analysis here in the prior weeks. We talked about this narrowing channel here, how if we break this narrowing channel, we'll see lower prices in the VIX, which will suggest a rally in the stock market. That is exactly what happened. We broke the narrowing channel, we retested it once, twice here, and then big sell-off. Now guys, we've seen the VIX has opened this week with a big gap, so it would suggest that they may try to fill the gap prior to the FOMC meeting, before we see the VIX starting to rise, and that will come with the FOMC meeting. Okay, so if we fill the gap at the beginning of the week, obviously the stock market will rally, and that would bode in well with our theory there, that we see higher prices at the beginning of the week and then a big drop after Wednesday. So watch out for the VIX, guys, and watch out for this gap fill. See what happens after they fill the gap, if they do get there. In terms of the DXY, guys, this was a strange one, because the DXY on Friday, we had a massive rally in the stock market, and also the DXY was also up, which suggests, it does imply to us that the rally is not sustainable. Okay, even as it stands now, the DXY is spiking higher, suggesting that lower prices in the stock market. Okay, so this again, it all depends on the FOMC on Wednesday. But as it stands, if you look from a higher time frame, guys, from a weekly time frame, this is still in an uptrend. Okay, so if you're looking from a weekly point of view, all we did, we had a pullback to this IC here, and we may see higher highs. Remember, our ultimate target is 115,200. That's the ultimate target. However, if you look at it from a daily perspective, we did have a break of structure here, so it does imply that we may go all the way up here to 11,700, where we may see a reaction from this IC and then have a lower low. So monitor this level here, 11,700. If we are able to consolidate here, we may be able to have a move lower and see a new lower low, which obviously will support the rally in the stock market. But I would expect that the FOMC will change this, and we may see higher prices here, so be very careful here. In terms of the gold, guys, here again, there's nothing happening here. We talked last week about the double bottom here, guys. This is is not happening as it stands. We need to see a break above this level here, about 1730. We haven't seen, the price is just consolidating here, okay, prior to the FOMC. We may see, if we see a move lower, then we perhaps go all the way down to our target of 1580, and if we go higher, then we expect this high to be taken, and then we can just look at and take into consideration the double bottom. But as it stands, it's in no man's land, okay, so we just have to wait and see. It does, as it stands, it does look bearish, okay, but this can all change with the FOMC meeting, okay. If they come up dovish, okay, and they talk about stopping raising interest rates, then this will rally, the dollar will fall, the stock market will rally, and everything will change, okay. So it's all depend, as I've mentioned, on the FOMC meeting. Next, we got GBP USD, and we talked about last week about 120 here being the ultimate target. However, it seems that the price has stopped into this daily IC. It stopped here and it's consolidating, guys. So here we may see a pullback, okay, especially if we get a strong dollar this week. So this is in a nice area. You can take a nice short from here, stop loss above, and aim for perhaps new lower lows here, okay, and GBP USD. So that's something to consider. Lastly, guys, we get Bitcoin here, and Bitcoin, we mentioned last week that I was expecting to see a rally here in Bitcoin. That's pretty much what happened. We caught that rally here. However, guys, we still need to see more here. We've got a potential double bottom here, and what I'm looking for prices to go above 25,000 to confirm this double bottom. So as it stands, still there's nothing going on here. I still expect to see a move higher, okay, perhaps into the 29,000-30,000, but as it stands, there's nothing going on, guys. So monitor this, and also monitor a break below 17,500, because if we break below, then we'll be ultimately going all the way to 12,550 or so, which was our ultimate target, and we're potentially looking for long-term opportunities if we do get down to this level. That's it from me this week, guys. Thank you very much for watching. Don't forget to like the video if you haven't done so already. Subscribe also if you haven't done so already. And if you are interested in trading the stock market, then please go over to our website, mcitradingacademy.co.uk, where you can find out more about the trading courses we offer. Thank you very much, guys. Be safe out there and be careful. It's going to be a very volatile week. Thank you very much, guys. Have a good one.